Hey guys, welcome to today's session. If you weren't aware, earlier on this week, I announced that today's session was going to be moved from our original Wednesday strategy development sessions, and for a good reason, because today I am joined by Moritz and Rolf from Edgewonk. So welcome to the session, guys. It's a real pleasure to have you on today.
Thank you.
Thanks for having us. Yeah.
As per usual, I'm going to ask anybody in the audience if you want your Darwin to be analyzed in this session. We'll be happy. All three of us are going to take a look at it today, so you don't have to listen to me drone on for an hour and just ramble about random statistics, because I've got friends to do that with me today. So if you're watching this stream on YouTube, Instagram, or X, please just drop your ticker in the chat box and we'll be happy to load that up and go through it for you. We're going to do it a little bit differently today because, as we were chatting before this session, what we generally do on these sessions is we look at top level data. So the data that's available on your Darwinex 0 and Darwinex dashboards. The problem with that is it doesn't go granular into the actual trades and the actual setups that you have. Whereas what Moritz and Rolf do over at Edgewonk is they go into granular detail about every single setup that you may have. So today we're going to try and break things down a little bit further. So it's a really good opportunity to come in, have your record analyzed. We'll go into some detail about your trades as well. So feel free to pop your ticker in the chat box and we'll load it up and we'll get started.
Sounds great.
I'm also glad to be back streaming. Last week, I was ill. I had a really bad fever, but they also drilled through an internet line on my estate. So every time I tried to stream last week, my PC pretty much blew up and wouldn't load, which was unfortunate. I'm gonna check whilst we're on here that the stream's running successfully, because last week this is what was happening. So just bear with me for 2 seconds, guys. Yeah, all looks good. All looks good.
All right.
So as I said, for the guys who've just joined, if anybody's watching and they want their strategy to be analyzed today, this is your chance, because we have Rolf and Moritz over from Edgewonk, who are specialized in trading journals and strategy development for over 10 years. So today is the day to come in, get your strategy analyzed, and we will give you some advice on anything that you can take advantage of moving forward. If not, we'll take a look at my strategy. The only problem is I don't have 6 months worth of data yet. But actually, do I tick over 6 months this month? 1, 2, 3, 4, 5. So it's about 4.5 months worth of data, which in fact, this is a question to you boys. What sort of track record length do you think is sufficient before you start making justified decisions moving forward? So I know you can spot patterns pretty early on, right? But at what point do you say this pattern is now a problem and I need to make a change?
Generally, 20 trades is a viable sample size, where, for example, if you take 20 trades and you see there's, for example, an edge or there's no edge there, you can already see that early pattern. That's absolutely correct. Obviously, if you're a swing trader, then maybe those 20 trades might take you a year to take. But if you're a day trader, that might be just 2 weeks or a month. So as a day trader, you can make faster adjustments, but you also need higher sample size in general as a day trader, I would say, because the variance is much higher in that trading style. You have higher slippage, you have higher commissions, etc. But when it comes to sample size, for me personally, I like to do adjustments after 50 trades. I look at my whole overall sample size, and then I look at the last 50 trades. And when I see a pattern emerging over those last 50 trades that is completely different, like an outlier versus my overall sample size, then I start to make adjustments one by one. Yeah.
Okay, so it varies based on your trading style, right?
Yes. Like it doesn't really matter. The time horizon doesn't really matter. It matters how many trades you take in that time. I mean, if you take 1,000 trades in a month, then you don't need to wait for a year. Obviously, market regimes change. So you still want to have that 1 year under your belt before, for example, taking on investors' capital. But as far as the statistical viability of your edge goes, it only depends on number of trades.
That was going to be my next question as well, is kind of seasonality. Do, do you think that those, let's say you take 1,000 trades, do you think they should be spread out across in sample and out of sample data, or would you be happy making a justified change to a strategy, regardless of the amount of trades? If like you said, it could be working really well, and then the past 50 trades, something changes. Would you then compare what's happened the last 50 trades compared to data from a different market cycle or market regime?
Ideally, you want to identify the market regimes and then compare the strategy's performance in those market regimes with each other. But let's be honest, most traders don't do that. They don't go that granular. So you can you can basically only say, okay, 2021, for example, 2020 was a wild year because it was COVID, completely different market regime than this year, for example. And then there was Trump administration. You can look at the market like that. For me personally, I try to do it as simple as possible. In Edgewonk, for example, I have trend filters. I say, okay, on the weekly chart and on the daily chart, we are above the moving average or below the moving average 200 on this particular market. And then I say we are downtrending or uptrending. And that's then how I compare my performance to those different market regimes. That's a super simple filter and it's quite efficient.
Interesting.
What we've also seen is that some traders track how the VIX overall is currently, and then that's a way how they can quantify what type of market regime was present at a certain time, and then they compare to now. The problem is that a lot of traders, if they don't have that data, they just always think, no, now it's very different to a month ago. But I think that's not always a correct assumption. So you would have to have some way of really quantifying what type of macro regime was present at a time before you can then say, I'm going to make adjustments based on the data or maybe a lack of data.
Do you think if somebody has that data right over the past, I don't know, 2 years, 5 years, 10 years, do you think you should preemptively adjust your strategy based, for example, one of the things I hear a lot is like the term summer markets, or where the markets generally get a little bit quieter through like June, July, August. Do you think that traders should preempt changes based on regimes like that if they have the data?
I mean, if over the last 3 years, for example, or 4 or 5 years, you see that the summer months for you are really slow in terms of performance, there's nothing wrong with taking July off, coming back in August, You need to recharge as well. I would say for most traders, probably around the Christmas time, then around the summertime is when their strategy doesn't have the hottest performance. And that's totally fine. Then go on a holiday, recharge, come back later. Nothing wrong with that. Actually, it's quite productive, I would say.
Yeah, I totally agree. A question I just thought of as well, and I don't know whether you guys even track this at Edgewonk. And guys, if you're watching this and you use Edgewonk, drop it in the chat below. I'd love to get your thoughts. Do you track the difference in number from how many traders have a journal and automatically track their trades through Edgewonk compared to how many people go back and review that data and perform like an ASR? Do you track that metric within your own sort of client base?
Yeah, we're about to go more into that. We don't have the data publicly yet, but yeah, in Edgewonk you have a feature where you can do weekly, monthly reviews. So that's definitely a possibility. And the traders because we do those reviews on our YouTube channel all the time, a lot of the traders do have those filled in. We don't always show them because there's a lot of public data, a lot of personal private data, but yeah, a lot of traders do that. Yeah.
Yeah, because it's interesting to me that like a lot of traders will talk about journaling being super important, but then when you get into it, actually the way that they see it is kind of a tick box exercise, which is really counterproductive. There's no point having a journal filled with 1,000 trades if you're not going to go back and actively review them, right? What's your thoughts on that? Like actually journaling comparing to reviewing your journal?
I mean, I personally, I'm a huge fan of even entering my trades manually. I don't even use the importer, even though we have import functions for pretty much every brokerage out there. I
I'm the
love to
same.
input my trades manually because you get a much more personal connection to them, and while you enter them into your journal, you relive them actually emotionally, and sometimes I even replay the trades then in TradingView to get the feeling again. So when I make my journal, I actually have more accurate data to put in, like from my emotional standpoint at the time, etc. My mental capacity at the time when I took the trade. If you only enter data into your journal and you don't review, then you might as well just not do it at all.
Yeah, yeah.
that the whole
That's
point
the way I
is
see it too.
And the thing is, we talked about this. Well, we had a lot of calls today, last week, because this is what we are currently building, is an automated analytics tool within Edgewonk. So we have identified 10, 15 key metrics within every trader's journal, and we're going to automatically go through those points and then give them an output. What does it mean? What does it tell them about their trading? Where they're leaving money on the table? Where they could improve their edge? So it's going to be automated as well. But yeah,
Awesome.
it's a very important point that you not only track data, but that you also look at it.
Yeah, I think it's super important. And going back to Maritz's point is that I also I mean, I don't do much discretionary trading anymore, but I never used like an automatic function. Whatever platform I used, whether it was Notion, Edgewonk, spreadsheet, whatever it is, I always tracked everything manually because I'm quite a lazy person by nature. And I think the automatic journaling, it's like you kind of go in the back of your head, oh, it's okay. That trade's already journaled. I'll think about that later. Whereas like when you know that at the end of the trading day, you have to go back and, like you say, relive that trade, plug in all the details, actually think about your maximum adverse excursion, and not just have it logged for you and all of those sorts of metrics. I think I think automatic journaling is a dangerous path for those who don't love to journal, because it's, again, going back to being a tick box exercise. So I massively stand with you there, Moritz. I think it's a great feature for those who it doesn't bother, but for somebody like myself who's quite lazy, yeah, it's a slippery slope. I just want to say, how we doing, Tan? It's been a while. It's good to see you here. Hope you're all good. Chatfin asked a question as well. Doesn't reduce my target VAR below 6.5%. I watched a video on the key indicators of the risk engine. Great to see you watching the content. It was super helpful, but I'd love to hear your advice on specific steps I could take. And I'm also open for any other advice. Thanks a lot for your time providing such a great platform. Appreciate the kind words massively, dude. I'm not sure what your actual question is. Your target VAR doesn't reduce my target VAR below 6.5%. We're always going to be targeting 6.5% or thereabouts for your Darwin anyway, so you're always going to be risk adjusted to that level. If you could expand on the question, I'll be happy to give you a better answer, but I don't want to guess at what your question is. So if you're still around in the stream, type your question in again, and I'll be happy to go over it. So let's take a look at my strategy. Unless somebody sat in the audience now, I appreciate the amount of people who are watching live now is more than when we first started. So if you want your strategy to be analyzed by myself and Rolf and Moritz from Edgewonk, then please drop your ticket in whichever chat box you're watching this on, whether you're watching it on Instagram, X, or YouTube, and we'll load up your strategy and we'll take a look at some of the data. But whilst we get into it, we'll just use my strategy and we can move across if needs be. So as I was telling you, gents, before we started the session, this is one of my portfolios. It is fully automated and currently runs about 15 strategies. So I'm giving you that for the sort of context behind the data here. And now, again, going back to the conversation that I had with Rolf and Moritz before we started the session, is at Darwinex, you kind of see surface level data. So I'm going to be providing feedback as to what my system is and why the data says certain things. And I'm going to be getting those guys to give me feedback on certain things that I can be doing or things that I can be exploring to help improve my strategy. you can watch this, you can take the things away and implement it on your own or on your own systems, or you can attend these sessions next week or the week after, and you can have your strategy analyzed live too as well. So this is to start. I've currently got, it did start at the end of April, so I wouldn't class that as a month. Here we go. Perfect. We've got somebody in the audience who wants theirs being analyzed. Rob, how
Cool.
we doing, dude? It's great to have you here. Bear Markets Capital, YDYT. Thank you for coming and saving the day. I hate talking about myself. I hate talking about my own strategy. So it's great to have you here. Tan said, I messed up my VAR multipliers a few months earlier, but I'll keep trading, bring stability back. That's what it's about, man. Come back stronger. Rob's asked to do SPWL as well. We'll do that after, Rob. We'll take a look at YD. Let's take a look at how many trades there are. Okay, so there's 82 trades across a 3-month period. You happy to give some feedback to this guy, you two?
Absolutely, yes. Let's do it.
82 sounds good, yeah.
Awesome. Cool. If you missed earlier on in the conversation, if you joined the stream a little bit later on, we were talking about a viable sample size for where you can make a justified decision to change something in your strategy. Of course, you don't want to be having 1 or 2 losing trades and then changing your whole system, because of course you'll never get anywhere then. So this trader started in June. So they've roughly 3 months this week since they've been live. 10% return, 3% drawdown. Let's take a look at their value at risk. So value at risk is 4.89, which tells me that this trader is super conservative, slightly lower risk than the S&P 500. So they are slightly being scaled up. So if you was looking at their raw data on MetaTrader level, their return will probably be, and I'm taking a guess here, 8% with maybe a 2.5% drawdown. So super similar to what we've seen from the risk-adjusted perspective, but we'll take a look at their assets first. So main asset, as you can see, 54% of their trades come from the DAX, 34% from the NQ, and then there's quite a few different assets down here, but at the moment they're pretty negligible. Can you see this? Can you see this data, or do I need to zoom into my screen?
Looks good to me.
Yep.
Okay, so we've got 44 trades on the DAX and 28 on the NASDAQ. Roughly the same win rate at 56.82% on DAX and 53.57% on the NQ. 2% return on NQ and 8% on the DAX. So to me, there's quite a standout difference between those two assets. But what's your thoughts on those initial figures?
I mean, I can see that this guy likes to trade the index futures, obviously. The DAX is his best performer. How much was the NQ? 2%, right?
2%, yeah.
Yeah, okay, but a couple fewer trades. Okay, so then the next thing that I would look at is his trading times, because if he trades the NQ and the DAX both during the London session, for example, that would explain why the strategy doesn't work as well on the NQ.
Yeah, so the majority of their trading, or 64% of their trading activity, is within the European session.
Okay, yeah. Then my first recommendation for this trader would be to probably focus completely on the DAX, because you're trading the European session anyway. Drop the NQ and stop trading in the New York session, because you'll be sitting in front of your screen for 8+ hours a day, which is also pretty rough for most traders. I think if you would focus on the DAX 100%, drop all the other assets, reduce your trading times a bit, use that extra time for journaling, improving, market research, you would probably boost your performance a lot and taking fewer trades.
Yeah, I always, very similar to the way you looked at these numbers, is I try and work out the expected value per trade. So it's like you might, for example, let's say that these were the other way around, right? And the more trades had been, or sorry, the higher return was on the NQ and the lower return was on the DAX. you would then look at them and say, well, the NQ clearly in this data set has a much higher expected value per position because you've taken, I don't know, half the amount of trades, yet you've tripled or quadrupled the return. So it's super interesting. I suppose at Edgewonk you can kind of go a little bit more granular with that because you can see where you're the more profitable on the DAX. Whereas again, with this, we don't know what assets that they were trading within the European session. For all we know, they were trading the NQ in the European session and the DAX in the US session. And so what? When you say drop the NQ, do you think it's better to focus only on your highest performing asset or variables, so highlighting where your performance is best and sticking only to that? Or do you prefer, because it's clear that they still have an edge on the NQ, right? It just might need some work. So do you think the trader would benefit from going through and sifting through all of their trades on the NQ and finding other variables? For example, you might find that every trade they take before the US Open is where they hemorrhage money on the NQ. Any trade after the US Open is where they make their money on the NQ. So do you think it's worthwhile going through and analyzing each individual asset, or just stick to DAX? Like, what's a cutoff point where you say no?
I wouldn't necessarily look at just how much is the performance difference and say, okay, the NQ has generally a smaller edge. We have looked at, over the last 10 years, hundreds of journals, and we see when you go down, the performance by time is really, I think, what caught Morit's attention here.
Yeah.
Because the problem that you have is that you might have a very good edge on the NQ as well, but because you've been trading actively in the morning, your mental capital is depleted. You're going to make suboptimal decisions, so you cannot execute your strategy at the highest level. So that you're leaving money on the table, you maybe go out of the day frustrated, and that has a lot of spillover effects. Whereas if you limit your trading time to 4 hours on the German Open, you could trade way more focused, much less time-wise, and then have time to recharge and just feel better about your trading in general, because it takes up a few hours of your day and you still make good profits. So it's probably even going to have an impact, or a good impact on your DAX trades the next day, because you just feel better. You can also go much more granular and more detailed into your DAX trades to see, okay, how can I work on this? Whereas if you have to improve 2 setups, or you want to improve 2 markets at the same time, it's going to be much more work for you. Just whereas focusing on one thing and just feeling better about your trading overall has a lot of spillover effects. So I think because we see this exactly this type of time of day chart in 90% of the traders that where we take a look at the journal, and it's always, again, fascinating. But a lot of traders are like that, and then at the end you see the performance drops off. They're making not optimal decisions.
How do you define whether, when there's a drop in performance from, let's say, the European session to the US session, how do you define, or what key measurements or metrics do you look at to decide whether that's more of, like you say, like a psychological thing, like decision-making fatigue, or what have you, or revenge trading or something, like you were saying, versus the technical edge just doesn't work at that time of day? Is there any metrics that you know of that you can look at to kind of get an idea?
Totally. Well, in Edgewonk, it's super simple, because every trade you can say, I did follow my rules versus I didn't follow my rules. So that's already a very good filter to see on what quality level do you execute your trades. But you can even go one step further and look at how do you, if the exit is good, you can see, okay, do I let my trades run optimally? So you go into the what we call trade management feature, where you see, do you let your trade run to your profit target, or do you get out early? You leave money on the table. So those are the 2 main things what we look at: quality of trading, and then also post-exit, post-entry, because a lot of traders spend all of their time specializing their entry, and then once they're in the trade, they are often completely lost and they have not done the work and analyze the data. So you can get a lot of information out of how they let their trade run, where's the target versus where's the stop. And those are all the things, if you only have one setup, it's much easier and straightforward to fine-tune those parameters.
Mhm. That's super interesting because, again, going back to the fact that when I'm analyzing someone's record, I only have kind of surface level data. So I struggle to find, like, I have to give two options, right? I have to say, well, it could be that your edge doesn't work at this time of day or because of this, or it could be that you're just getting trigger happy in the afternoon and placing too many trades. And I can't make a concrete decision because I don't know. Whereas I'm sure when you have a lot more granular trade data available to you, you can actually see patterns to go, well, it's probably not your decision-making fatigue because you're still doing the right things. You know, you're taking A+ setups in the afternoon. They're just not working out. Okay, and that then you would err on the side of it's probably a technical issue in terms of the system just doesn't work at that time of day. Which is, you know, every system has its optimal hours, optimal days, and optimal assets, etc.
And just want to add something because this is super important, I think. We've looked at a lot of journals, and when we talk to the traders, they don't know what's the problem with their edge. We go into their journal, and it's very simple. You just pass out trades where you followed the system versus where you didn't. And suddenly, when you only look at the trades where they followed their system, the system would have made money. The problem is often not the system. It's something that we are going to develop. It's true system edge. So what is the performance of only your setup if you would take out all of the trades where you essentially also know that you made a mistake? Because if you don't know that, you're going to make completely wrong decisions about when you should stop trading, what you should stop trading, or what you should change. It's all based on guesswork if you cannot go very granular there.
Yeah. Do you have a functionality to track active management versus passive management then?
Yeah, we do. We had this feature from version 1 10 years ago when Edgewonk was an Excel file. This was, I think, the best feature that we had from the beginning.
Yeah. Yeah, because that's also what a lot of traders don't realize is what's getting in their way, right?
Yes.
They can point and swear at a chart all they want. They can, you know, make up any excuse. But in fact, if you study a lot of traders, or if a lot of traders were to track their progress from an edge compared to their management of the edge, oftentimes you come out to completely different results. Like, do you see that a lot? Even though you have the feature, do you still see that like a lot of traders do something different to what they were supposed to?
Totally. And we have done podcasts on our YouTube channel with very high level trading psychologists. And this is the question that we always ask. How do you get traders to do what they know they should be doing? Because when we look into the journals, they have those end of week reviews and they write, I did this again, I shouldn't do this. You come back the next week, same thing. And it's a fascinating question. What makes them get to this point where they finally start doing what they know they should be doing? This is
Do you think you can ever actually get to that level? Like, is it just a self-control muscle like that a trader develops, or do you think they have to have some form of awareness? Like, because I know, for example, like I was saying, I trade fully automated now. So the majority of my trading flow is fully automated, but I have been manual trading for the past 7 years almost. And so even now, I might load up my systems that are in trades, and I'll be like, oh, should I close this now? And I know I shouldn't, because all of my back tests are where I've got my data, and that's why I've implemented the strategy. But I'll look at it and I'll be like, this is definitely going to stop me out here. And I still now really struggle, and I think I struggle because I've relinquished control a little bit of the strategies, but I still feel like I have a fairly good reflex muscle, if you want to call it that, when it comes to trading. But even now, I still struggle. I still get those ideas in my head. Should I close the trade?
I mean, why do people not eat healthy? Why do people not go to the gym even though they buy a gym membership? It's always the same question, right?
It sounds like you're targeting me here, Moritz.
Targeting myself as well.
me too.
It's really hard, right? I live in Hong Kong, and there are a lot of hedge funds around here and quite a few traders. And this one trader I was talking to, he was a quant trader in a boutique hedge fund. And there was only like 5 people in that fund, so 3 traders, 1 accountant, 1 founder. And they were going into a drawdown. And my friend came into the office in the morning, and there were no positions on, even though he knew that there were always positions on with his strategies. And he asked what was going on, and then the founder of that fund, he said, "Yeah, I closed your positions because I knew they were going to be losers."
Oh no.
So
Talk
obviously,
about micromanaging.
exactly, yes. So obviously, all those trades recovered and they would have gone out of the drawdown, but because the positions were closed, they didn't. And my friend quit the fund, and the fund got closed a couple months later. So that reflex to think that you know better than your system, even if it's a quant system that has been tested over the last 20 years of data, it's really, really strong to act on that impulse.
And do you think in that specific example, they were more eager to close those trades because of the drawdown that they were currently in at the time? Like, do you think that do you see a pattern with that when you're looking at somebody's journal as a kind of a broader perspective? Like when a trader goes through a drawdown, you can see the slippery slope coming in and bad habits forming.
Definitely, yeah. And the first thing that usually suffers is the journaling. That's
Yeah.
quite interesting. So when people have 5, 6, 7 losing trades, the first thing they stop doing is the journaling, and then from there it's just downhill. Not all of the people, but a lot of them, because they get frustrated, and then the hardest things get dropped first. That's totally normal, and then performance deteriorates more and more and more until they hit either the blow up phase, or they take a break for a week or 2 and then come back and then start the boom and bust cycle again. Right? That's a classic for a lot of traders, the boom and bust cycle.
It's really interesting that you say that because the next metric that we have is return distribution by day of the week. And there's an example I always give for this in regards to the boom and bust cycle. And Rob says, and they switch strategies constantly. Yeah, exactly. They don't realize that they're getting in their own way is the big issue.
Yes.
But one of the examples I have of this, it was a pattern that I noticed. So often I'll do these calls on more of a one-to-one basis, or I analyze somebody's record like privately, whether it's on a call or just through text. And I went through a period where I saw the same pattern with this data, with the return by day of the week, across 5 to 6 different people. And I started asking them, like, why do you think this is? Can we dig a little bit into that? Because to me, before I become a trader, I was a data analyst. So I love spotting patterns in data. I love trying to figure out why there's patterns there. And what I found with it wasn't the case for all of them, but for the majority of the traders that had this same pattern, going to what you said, it was on a Saturday or Sunday, they had a complete mental reset, right? And so they were ready for the week ahead. They'd had a couple of days off the charts. They'd had time to process their performance from last week and prepare for the week ahead. They would do all their journaling. They would get ready. Monday would come, and Monday was their top performing day of the week by far. They would absolutely smash it on Monday because they'd done everything that they should have done. And then Tuesday, Wednesday, Thursday was always a negative day, or at least for this period of time for these traders. Was Tuesday, Wednesday, Thursday, you could see they were in a bit of a rut. And then Friday, again, was another positive day. And so I was like, that's really interesting because everybody who I'm talking to at the minute just seemed to be condensed in this same pattern. And so I was asking them, and I kind of was digging into them more as a person as opposed to their strategy. And what I found with like 4 or 5 of them was that, like I say, they were journaling, they were doing everything that they should on the Monday. They'd have a fantastic day of performance because they did everything that they should. Then they get overconfident and cocky going into Tuesday. They don't do their planning. Then they have a bad day. They don't do their journaling. That spills into Wednesday, spills into Thursday. And then by the time Thursday comes, they go, oh crap, I've got 1 day of the week left. I'm now in drawdown. Let's claw it back. They start journaling again. They start preparing. They get ready for Friday, smash Friday, back into the weekend, full reset, same cycle the following week. And I see that so often. And like I say, there was like 5 or 6 traders who I spoke to within the same week that all had that pattern, and it blew my mind because I sort of I sat back and tried to think logically. I was like, if you know that these things that you can do, i.e., journaling, planning your day, executing the way you should, and managing your trades the way you should, why would you stop doing that when it gets you the good results? Like, just baffles me. And like you say, the hardest things get dropped first. Or I wouldn't say journaling's the hardest thing, but the things that are kind of seen as like a subtask, right? Trading is the task. Journaling is a subtask. You've had a bad day. Last thing that you want to do is sit down and go, ugh, I can't be bothered to trade today. So what would you say to somebody who is like that, who goes through that cycle and just kind of puts journaling on the back foot and thinks, it is what it is. I'll journal my good trades.
Well, I think it's not that they don't want to do the journaling because it's hard. I think it's they don't do it because it's uncomfortable, because they don't want to confront their issues. In that case, I would say reduce it to an absolute minimum. So you journal your trades, use the import if you want. At least you get the data in, and then at least for every trade, say, did I follow my rules? Yes or no. That's a very small thing that they can do this in 10 minutes for the whole trading week, but it doesn't break this streak. So when you're on a diet and you do sports, and then suddenly there comes this day where you go off the rails, it's so hard to get back on. Or the problem is that if you don't get back on the next day, then it's
spills over.
Yes.
Spills over. A
But
day
if you just
becomes a week becomes a
correct,
month.
yes,
And yeah.
and there, before
Yeah.
yes. But if you just make it small and doable the next day, I think that's your threshold.
Yeah,
Of course,
I
this
think
is
that's underrated advice. Is trying to break it down into smaller chunks. But I guess the only problem with that is for traders who are more active. So let's say I take one trade a day. It's pretty easy to put 10 minutes aside at the end of the day, and you remember that trade because it was the only time that your emotions were heightened through the day. But if somebody takes 5, 6, 10 trades in a day, do you think it's better for them to put time aside as and when they trade? So after the trade, 10 minutes, I need to journal this trade. Or at the end of the day where they can do it in one go.
Morris, you want to go?
I think, yeah, sure. What I like to do, like I always have a notepad with some handwritten notes. Whenever I take a position, I jot down some bullet points, how I feel in the moments, and before I take the trade, I don't really go through a checklist anymore, but I like to quickly write down what I'm seeing. Because it helps me to reflect a little bit on my own state of mind and actually if what I'm seeing makes sense, or if I see what I want to see. And then I can use those notes later after the trading session to journal those trades completely. So that's how I like to do it, and that's how actually I teach it as well to any students, because it makes a lot more sense in the moment. Before you're taking the trade, you're gonna have emotions. While you're in the trade, you have emotions. Before every decision, you're gonna have an emotion. And if you just write it down quickly, it takes 10 seconds. If you're not trading the 5 seconds charts, you always have 10 seconds before making a decision. And that really helps with your decisions, with your clarity, with your journaling. So that's the best process that I have found over the years.
You said something interesting there about emotions. This is kind of going off topic a little bit, but what do you think is more important, or do you think they're equally important? Logging the actual trade and the outcome, so the physical data, versus logging your emotions and how you acted during the trade. Because going back to the active versus passive trade management, they can show two different things, right?
Yeah, it's super important to know what's your true edge, and also how your decisions impact your edge. And you have to journal that separately. That's exactly what we do in Edgewonk. So you will always know what was your actual edge if you have acted according to your system, and what is the edge that you actually get because of your emotions and your decision making. Most of the time, of course, you're never going to perform at 100% of your true edge. That's just utopia. Van Tharp, for example, he said his super traders, they operate at 90% efficiency, which means out of 100 trades, they only make mistakes on 10 out of those 100 trades. And that's world class, obviously. If you can do that, fantastic. I think most traders that we see, their efficiency is around 70, 80% if they're profitable, which is already really good. And you should be aware of those numbers and hopefully be able to make adjustments if your emotions interfere with your edge.
And when you say efficiency, that doesn't necessarily relate to profitability. I'm guessing, like in terms of going from 80 to 90%, it doesn't always have a direct correlation with higher P&L, because mistakes, I think what I'm trying to say is you can get rewarded for making mistakes sometimes in this game. So let's say I closed a massive position as a winner, didn't follow my rules or strategy or plan, and then it actually turned out to be a losing trade. I've been rewarded for that mistake. So my efficiency is down, but my P&L is up. Is that the case, or does it usually balance out that higher efficiency is higher profitability?
I mean, over the long run, if your system has an edge, higher efficiency means more money. But in the short-term variance, of course, the process and the results, they don't correlate.
Okay.
So
yeah, I think
if you
that's perfect. Yeah.
Yeah, that makes sense, right?
I just wanted to say as well, we had a comment from Tan, who has been in our Discord for a long time. Super nice guy. He said, by the way, I've been using Edgewonk since April. So far, good experience.
Nice.
Thank you.
Edgewonk.
Yeah.
So let's move on to return distribution by day of the week, because this is one of my favorite statistics to get into. Again, like I said earlier, because I like to split it out because there's so many reasons as to why something may be. Again, it is everything that I say when I go over these variables are actual conversations that I've had with people. So I don't just pick things out of thin air. But for example, as I was mentioning earlier, is I spoke to a trader before whose Friday performance was really poor, but they were a really great trader and they couldn't figure out why. Turns out they always finished early and went to a pub. They were a UK-based trader. They worked on a building site. And generally in the UK, if you work on a building site, you finish early on a Friday, you go have a beer with your friends, right? Or the lads that you've been building with. And turns out this guy would have a few drinks, would get a bit skew-if, and then play some trades. And he still couldn't understand. And I think the problem for him and what we drove it down to was that the trades would be closed by the time he would get home from the pub, because he'd obviously realized that he was doing something stupid. He'd then have the weekend to clear his mind. And so by the time he got to trading again on a Monday, it wasn't an issue because it was history. And so he was just stuck in this loop of going to the pub most Fridays, having a drink, taking some poor trades, and then getting stuck in that. The other example that I had was a woman actually who on Wednesday, her performance it wasn't bad, but it was significantly lower than the rest. And what we found and what she had to work on after the session was on a Wednesday, that was the only day of the week where she had to physically go and take her daughter to school. Now, what that did was it took her away from her screens, took her away from her desk during London Open. And because of that, she would rush trades before leaving the house. She would be in the car, like having to pull over to monitor a position. And generally, that's not great for decision making, right? When you've got that pressure, that time rush, and away from your screens. So I get really intrigued by this metric because there are certain things that are from a personal perspective, but there's also things from a technical perspective. For example, a trend following system is going to perform better on certain days than a mean reversion system, just by nature of the market and when it's likely to mean revert. How much weight would you put to this? Because I know you said earlier, Rolf, you don't look too much into this, but how much weight would you put to this when in terms of like breaking down a strategy to see when it's most profitable? Would you even bother looking at the day of the week?
Well, I think without context, it's going to be hard or impossible. You always give those explanations why a certain day is not doing well, but if you only look at it like from a surface level, I think you should not make any major decisions unless
Yeah.
you know exactly what is
Agreed.
driving the
100. Yeah,
performance.
agreed.
But
So
if you
like,
know what's causing it, obviously, yeah, you should
yeah,
get in there, fix it, or stop trading on Wednesday when you have your daughter and you need to drive her. Everyone is in trading because you want to have the freedom. So embrace that freedom on a Wednesday, and yeah, come back the next day refreshed. I think
100%.
that's
I completely agree with you with that. Is that you need, and this is why I said again before we started the session, is when you're looking at these, you kind of need to be able to speak to the trader because you need to understand why things look the way they do. I'm going to show you an interesting one. Going back to THA, we'll take a look at their return or their performance by day of the week, because to me, this always like blows my mind, right? So let's wait for it to load. So this is their distribution by day of the week. Now, this is over a 10-year long record. Okay, so their record with us is like 9 years or 10 years. Now, you can see on Monday, they've never been in the green. Their Monday equity line has always been in the red. So over a 10-year period, they've lost 8%. And you compare that to a Thursday, they made 223%, which is uncompounded compared to the return that we show on their actual account. Now, what would you... I know this is, again, without context, but if I come to you as a trader, right, and I said, I've got 10-year record, I hemorrhage money on a Monday, but I make so much money on a Thursday, A, what would your advice be? And B, how would you start to diagnose why there is such a disparity between those 2 days and the performance from those 2 days?
Well, you would have to know a little bit more about the strategy. We talked about this guy's strategy. He was on a couple podcasts, so we know he's a news event trader. Thursdays you have the FOMC, which probably makes him a lot of money because those interest rate meetings, they move the market nicely and they're quite predictable and they produce nice moves. So that's what I would say where the edge comes from on a Thursday. Monday, not a lot of huge news items, and that's probably where this comes from. And if I were this guy, I would take Mondays off. Like make it a 4-day week. And
Yeah. I did speak to him about this actually the once, and I kind of said, like, you know, I'm sure it's no surprise to you that on Mondays you usually lose money. And I think he kind of said something along the lines of it's where he unravels positions from the previous week. So if he gets into a position that's potentially a loser, so like, again, I suppose it's an issue with this, right? Because it is without context. That Monday P&L could be trades from the Thursday, right? Like losing trades that have been held onto, sort of thing. I think. I don't know. I'm just spitballing here.
When we do those analyses, when we look before we go into the time of day, week of day, we always check holding time, so we know is it a day trader or a swing trader. Because as you said, if trades stretch across multiple days, this becomes a little bit hard to analyze because you don't know, is this the entry, the exit, and so you cannot say Mondays are performing or Fridays are performing for that reason, because as you said, you could exit trades from the past few days. So
yeah,
the holding time and knowing what type of traders is very important. Yeah.
I mean, I think if I'm not mistaken, I don't think his holding time, this is THA specifically, I don't think his holding time is very long. I know he sometimes does hold trades, you know, across the day or across the weekend, but on average, I think he's winning trades like an hour or two off the top of my head. Let's take a look. Oh, okay, completely wrong. It's his losing trades that's 43 minutes. His average winning trade is 7.5 hours, giving him a duration ratio of 10.73, which is huge. It's rare to see one that big.
That's really good.
I always say it's great because it shows that they're willing to let their winners run and willing to cut their losing trades soon, which is trading 101, right? That's what everybody should aim to do, sort of thing.
Yes.
Let's take a look at some of the statistics on here.
By the way, can we see the average winner versus average loser or the ratio?
On THA or on this one?
On this one here.
This one, yeah. So I'll read them out just in case People can't see. In fact, let me zoom in.
Ah, nice.
Oh, I've got a little bit too big. So here you can see the amount of trades 82, 78.5% long exposure, which is interesting. But I guess because they're trading indices, they're likely going to have a higher skew towards long only. 1.67 daily trade frequency, 54% win rate, with an average payoff ratio of 1.93, which is solid, right? Positive on both win rate and average risk to reward. Like that's solid, isn't it? Two risk to reward with 54% win rate almost.
Yeah, it's fantastic. This is obviously a really good edge if this continues in that way. I was asking about the payoff ratio because what we have seen, for example, over many reviews is that losing traders almost never have a positive payoff ratio. I mean, it's 1.0 basically or less.
Interesting.
And pretty much every winning trader has 1.4, 1.5 or higher. That just shows you the power of simple maths in the end, simple basic maths, but also it takes out so much pressure from your trading that because you don't need to maintain a high win rate, you can have 4, 5, 6 losers in a row. You have 2, 3 winners. You're back to break even. It takes a lot of stress out of your system as well. So I think this trader here, 54% win rate, 1.9 risk reward, fantastic. That's really good.
That's really interesting that you say the majority of losing traders are 1 or sub 1. Why do you think that is? Do you put that down to more them cutting trades sooner than they should, or just poor system building and having like a negative risk to reward?
100% right. Yeah, it's the leaving money on the table. What is really fascinating, because we analyze, it's called potential versus actual performance. So actual is how much they realized, and potential is if they would have let the trade run to their take profit. And they're often going very different ways. So yeah, it's that, but also a lot of traders have small take profit targets. So that's another thing that we see quite a bit, that they are not confident in setting targets that are 2, 3, 4R. Very often they have very small targets. And if you see that in a journal, it's very good, because there's something that you could improve. You can see, is the price overshooting your target on average? Then just set it a little bit higher, and often that's a big improvement.
Do you think traders do that because they know how difficult trading is, and therefore their confidence to put a bigger target, like you say, is lower? So when they're in a winning trade and, like, let's say they're up 1R, they're like, oh, I don't want to see this turn into a loser now. Like, oh, actually, a better question: Do you track if a trader moves their stop to break even?
We can track that if the trader like we have a button break even. So we can actually track that, yeah. For the break-even stat itself, it's quite interesting. What is the most interesting to me is that we have a feature called alternative strategies, where the trader can basically test different trade management techniques. So if he wants to set his stop to break even at 2R or at 1R or at 0.5R, or when we reach a new high of the day, or whatever idea comes to mind, he can test that strategy in his alt strategies tab in Edgewonk, and then find the best trade management strategy based on his entries. And
so it will calculate all that for you when you're running that, like a simulation sort of thing.
You have to do it yourself.
Okay.
You basically input the idea, you write down what your idea is, and then you go back when the trade is finished. You go back to the trade and you say, what would have happened if I always closed my trade at 3R, always at 4R, etc. And the easiest way, if you're already profitable, the easiest way to make more money is to extend your take profits, usually, because your signals are already good.
Correct.
Yeah. Which is
another thing. What we see on the other side is the stop loss is. Maybe you want to go there? So I don't know. Sorry.
Yeah, the stop loss is usually quite wide. Yeah, that's another thing that we see a lot. That's why we have our average updraw and drawdown statistics. We see it a lot of the times that traders, they are not very confident in their ability to pick targets and stop losses. So the stop losses are too wide, their take profits are too close. And when you start working on that, you don't need to work on refining your entries all the time to be obsessed with win rate. It's completely the wrong way to think about profitability in trading. You have to think about extending your yield, having tighter stop losses, and better trade management strategy.
It's interesting you say that, because I always say on every one of these sessions every week, I always say if there's one metric that can change a break-even or non-profitable trader into a potentially profitable trader, it's their maximum adverse excursion. Because that is the one thing that any trader can pretty much improve on, right? Because almost everybody oversizes their stop. Pretty much, I would say, or every profitable trader, because it's so difficult to get it nailed. And of course, you're going to have outliers in your data. But let me scroll down. So, for example, like measuring your maximum adverse excursion. If I know that the maximum a trade has gone against me for the past 2 years is 30 pips, and I'm still risking 50 pips on a position, I'm overshooting it by 20 pips. Right? Because it makes me feel good. But the maximum a winning trade has ever gone against me is 30. It makes no sense to risk the extended 20 pips.
Yes.
And so, like, I presume that's what you meant by, what did you call the metric? Max upside, max?
Yeah, max updraw, max drawdown is what we call it. It's basically
yeah.
exactly this. Yes.
The same as an excursion, yeah.
Yes.
Because I think there's so much you can play around with this. Of course, you have to have an edge, right? So as long as your edge is above 50% win rate, at least you know that the signals that you're getting are good. But if you realize that you're oversizing your stop and undersizing your target, that can change the system completely.
Yeah,
just
totally.
by a few simple changes. The only problem with automatic maximum favorable excursion charts like this, where it measures how far the trade went for you, is they only ever measure how far they went for you whilst you was in the trade. Whereas you actually need, and rightly so, right? The algorithm doesn't have discretion, so it will track how far it went when you're in the trade, but you also need to know how far it went after you closed, right? Because again, I could say I'm smashing every single one of my TPs, or all my trades are hitting my target, great. But if every single trade is running for another 20, 30, 40, 50 pips afterwards, you need to be aware of that, because you're leaving so much money on the table.
Yes.
Yep. And that's where manual journaling can come in. So in Edgewonk, you can track high and low of the price of the trade. But what we often recommend is that if you're a day trader, you track the high until and the low at the end of your trading day, because you don't want to extend your holding time for overnight. You want to see what was the high and the low of that day. And there you can then see, did the price after my exit continue to go up? And that's then how you can get around that. Yeah. But it's
Yes.
manual, but you get a lot out of manual data input. But now it's not very fancy.
Yeah, I think you have to have a bit of realism when you're doing that, right? Because if you're long, I don't know, if you're long the DAX and it runs 200 points on the day and you caught 180, you go, oh, well, I could have caught 20 points. But if then the following day or following week it runs another 10,000 points, you go, my maximum excursion was 10,000 points. Well, when have you ever held a trade for 10,000 points, you know? But I've seen people do it in the past, and they'll be like, well, if only I'd have caught that 20% move after. And I'm like, yeah, but you wouldn't have, would you? So let's keep it realistic, which is why I like what you say on the, the higher the day or the lower the day. That's where you should really, unless I guess you're a swing trader, then maybe you could do higher the week and lower the week, I suppose.
Totally, yeah.
And just suit it around you. But you have to understand how much you're leaving on the table relative to your average holding time, I guess, which could be another way to track it, is like through an average holding time period, what was the high or low. When it comes to maximum negative excursion or adverse excursion, which is the downside, there's two things that I like to look at doing. And that's either bringing my stop up to a place where I know I'm pretty covered. So again, if my winning trades have only ever gone against me by 30 pips or 30 points, I can tighten my stop from 50 to 30 pretty comfortably, knowing that the only trades that are going to stop me out are my losers, really, or at least historically speaking. The other thing is, if you know that your average negative excursion is 10 pips, and pretty much every trade goes against you 10 pips, you can also fine tune your entries, right? So instead of entering at X level, you pull it down by 5 pips, 6 pips, 10 pips, and then run a sim to see how many trades you would have missed if the additional size or the additional P&L from your current winning trades would have outweighed, the 2 or 3 trades that you missed. Do you think I'm sort of on the right tracks there with the kind of things that I look at to improve a strategy when it comes to these?
I think so, yeah. I mean, I can remember a strategy that I fine-tuned a long time ago was where I did pretty much exactly that whenever I entered, then price went against me first and then took off most of the time. So simply what I did was waiting for the entry signal, and then when the entry signal hit, I set a buy limit further down, right, from the actual signal. You can totally do that, and that will boost your risk reward a lot in the long run. It will make a huge difference to your bottom line. And finding these things is just so vital to your long-term survivability in the market as well. Because every little thing that you can find that will improve your edge is so important. If you want to make it as a career trader for 20, 30, 40 years, you have to keep doing this. It never stops, right? It's not like you find your edge and then you're like, okay, I'm going to keep doing this for the next 50 years.
Yeah.
You always have to adjust. So the journaling never stops.
Well, like you said earlier, as long as the market regimes keep changing, you have to keep adapting, right?
Yes, absolutely. And that mindset, that growth mindset, you have to go with it into trading, and then you have to keep it as long as you trade. Peter Brand said that you are not a profitable trader until you quit trading, because you can actually lose all the money you made in a single trade.
Yeah, which is a scary thought, right? It just shows you the power of leverage, I suppose.
Yeah, that's the business.
So we'll draw the session to an end in a moment, but before we do, I want you both to give me the one metric or the one thing that most traders overlook when they're looking at their journal that they could improve on.
Does it have to be a metric that, or could it be like a proprietary thing that?
Yep, can be anything. What do you think every trader would benefit from when it comes to like journaling?
Okay, fair enough. I can speak maybe, and Moritz, you can think about it for a while.
Yeah,
Moritz mentioned it, I think, in the beginning, I think efficiency is really where I think, because let me explain, the way we define efficiency is, how often do you follow your trading rules? In Edgewonk, you get a percentage-based efficiency metric, and you can then see your level of discipline evolve and change over time. And because that helps you distinguish between the true system edge and how much you are screwing up your whole system. Because we've had a call with a trader who, I think I just explained it, he was losing, but if you look at only the trades where he did follow the rules, the system was profitable. He sent us an email. You can send us an email and we take a look at your journal and put it on YouTube. And he messaged us, said, hey, I'm ready to give up trading. I've been in this for, I don't know, 5, 7 years. Nothing seems to work. We looked at the journal, we passed out the data and said, your system is actually profitable. You would have made money if you just would not mess up your trades every now and then. And it doesn't take a lot. It's not like the efficiency was very, very extremely low. Just enough to skew it against him that his mistakes were eating up all of profits. And I think being able to see that difference is so helpful for traders, because it can give them confidence in their system. A lot of traders are switching strategies all the time because they think something is wrong with their system, and then you get into the system hopping loop, and at one point you give up, which is what most people do. But if you understand your system is making money, it's just a matter of you following it. And I think the first step, it starts with you actually understanding and seeing it on the screen, by seeing the hard number, how much you could have made, and how much you actually did make with the system. I think that's where behavioral change can start. So I think it's not only one metric, but what the metric tells you about your system. I think that's for traders who are struggling around the break-even phase, maybe slightly profitable, but still have those up and downs. I think this is going to be really, really helpful. Yeah.
Agree.
And also, I think even being aware of that efficiency, right? Like you said, that trader he was ready to quit and give up. He wasn't even aware that he was operating at
Yeah,
such
that
an
was the
inefficient
shocking thing.
level.
Yes, yes. I messaged him and I said, "Hey, you actually know how profitable your system is?" And he said, "No, I'm losing. You see it in my Edgewonk yourself." And then I sent him the video that we made, and it was he was completely shocked.
Light
Yeah,
switch moment sort of thing.
yeah, it was completely. He was very, very shocked. Yeah.
Which for us was also a wake-up call for us as the Edgewonk developers, because we thought obviously we have a bird's eye view on we know how everything works, but we need to understand better our users as well, how they use Edgewonk. And a lot of the sessions that we do with traders, for us it's very obvious where their problems are based on the data they provide us. But then when we show them that data, they're like, "Ooh, where did that come from? I didn't know that at all." But it's just, one click away, that thing that could change your life, which is wild. So we are working on making that a lot better as well.
But again, that's why I asked the question earlier on was, is there a big difference between those who have a journal and those who actually journal and review? Because like you say, when data comes out of nowhere, is it actually out of nowhere? Because if you'd have looked, like you'd know that you was doing this same thing again and again and again that was kind of negatively hurting you. So I do think it's so important for somebody to have a journal, but not just have it, actively embrace it. And I've always said this for the past few years. To actively embrace having that journal and really digging into it on a regular basis. How often do you think somebody should review their journal, like daily, weekly, monthly?
For me personally, I would say weekly is good. You do it on a weekend. You see what went well this week, what didn't go so well this week, and then you can set an intent for next week, the one thing that you want to focus on, for example, improving this week, and then you can get along with those points. So the intention I set for the week, for example, I want to always manage my trades correctly, and then at the end of the week see whether I managed to do that or not, and what impact it had on my overall confidence as well, actually sticking to my system. So weekly you do this intention setting, then quarterly is where you can make those bigger changes, usually after you have those 50, 60, 70 trades under your belt. And then end of year is when you want to really assess how things went and whether you need to make major adjustments to your maybe whole approach even. Yeah. But weekly is a good place to start.
Yeah. Drowning out the noise of intraday, but capturing enough information, because I suppose you still feel the past couple of days worth of trading decisions and emotions at the end of the week.
Yes, and curiosity here is so important. The people that, like those high-level trading psychologists that we talk to, they all say like one trait that all very highly profitable traders have in common is curiosity. And digging into your journal and really finding that edge, that requires curiosity. Not only about the markets and your strategy, but also about yourself and how you can improve that famous growth mindset. And that's because you asked which metric is super important for traders. The one thing that I choose is not win rate, but again, risk reward. It's so simple and so obvious, but most traders completely overlook that, because if you take away the focus from the entries, everyone is so focused on the entries, but it's just one of the least important things in the end. The most important thing is your trade management and where you set your take profit and your stop loss. there were experiments done in the past where people entered with a coin flip and turned a profit over 100 trades because their trade management was so good. So that curiosity that you can use in Edgewonk with the alternative strategies, what would happen if I do this, if I do that, if I do this, if I do that after the entry? That's where you really start making money. Curiosity.
Yeah, solid. I think you've covered a lot there, but curiosity is everything, right? Because
Yes.
you're constantly learning, you're constantly developing your skills, and without curiosity, you'll get left behind very, very quick from the traders who are curious.
Yes, absolutely.
Right, I'm just going to go over some of the questions that we've got from YouTube. So Rob asked, can we go over SPWL? We're going to have to do that in a different session, Rob, because it's very late. Maritz is in Hong Kong, so I believe it's probably, is it past midnight yet?
Yeah.
So
12 or
Maritz
12.
needs,
My son is going to wake up soon and wants his bottle.
Perfect timing then, yeah.
yeah, so he's on daddy duty tonight, right? So
Yes.
but we'll be back. I mean, I'm not sure what date we're going to do. Perhaps in a couple of weeks we can come back and do another session, or even next week if you guys are free. We can agree on that outside of this call. But Rob, I promise you, next time we'll go over SPWL. Today was more of an introduction, so that you guys can get to know about Edgewonk, and Edgewonk get to know about how we do things over at Darwinex. But like I say, I don't want to keep Maritz from his sleep, considering it's midnight in Hong Kong right now. Tan said, yeah, been using Edgewonk since April. Chatfin said, my comment got cut. My ticker is XGQ, and I wanted to hear some advice on how my strategy can match better with the risk engine and some advice from Edgewonk. Now, I mean, there's been like an hour of advice from Edgewonk, so I hope you can take some of that away from this session. But in terms of matching your system with a risk engine, don't get caught in that loophole of trying to find out a way to match your system to Darwinex's risk engine. Trade as good as you possibly can do. Like, the risk engine is a completely unbiased tool that will take a look at your trades and will pair it with our risk management, which effectively reduces or increases your value at risk to 6.5%. Don't try and game that system because it gets risk adjusted anyway. If you want me to talk about that in more detail, just drop me a message. I will send the link to the Discord now. Drop me a message on the Discord. You can find my name. It's Kieran-Darwinex. Grab the link and we can jump on a call and we can have a chat about it so that you completely understand what I'm talking about. There we go. I've just dropped the Discord link in the comments so that you can take a look at that. And I'm always happy to jump on a call and we can go over that in more detail. Bear Markets Capital said, just trying to only trade DAX, which is an NQ, which is exactly what Moritz said you should be doing. Rob, is that trade society at the bottom? Don't know what you mean by that, dude.
It's the first website that we started where then Edgewonk came from. So there's a blog and just trading education, but it's not active anymore. Yeah.
Okay. I had no idea what he was asking, but thank you for the
That's good to see. Yeah. I still remember.
Ashutash said, how to check it. This is a question for you guys, I suppose. How to check if the market regime has changed. My system works great sometimes, and sometimes it doesn't, and it gives continuous losers.
Well, as you said, Moritz said, tracking which general market direction you're currently in. Is it up or down? Because price tends to behave differently during up or down markets. If you want to get volatility, track the level of wicks. You can track the level of wicks, or is the wicks above average? Is it below average? If you don't want to get too granular, and then you can. I think that gives you a very good starting place to see what current market you're in without overloading yourself with data.
Keep it simple, yeah. That's what I would say as
well. Simple and doable, yeah, because you want to maintain it, and yeah.
I think it's different for every trader as well, isn't it? Based on what you're trading and how you're trading. Like, if you're trading a risk asset, you might notice a market regime a little bit quicker than if you're trading the euro dollar, for example. So I think you kind of get a little bit of a gut feel for that sort of thing, don't you, as well? Where
you could also track the higher time frame of your specific instrument to see where your higher time frame where your instrument on the higher time frame is. with a few metrics.
Yep.
Yeah.
Or ATR for volatility, stuff like that. Yeah, just be curious again. Start tracking a few simple things. See, maybe go over your past trades and add that data into your journal, and see whether you can find a correlation between your performance and that regime. And if yes, fantastic, then you can make adjustments going forward.
100%. And then finally, we had a question from Abdo, which is directed to me, I believe, saying that the RE, which I presume is risk engine, hurts a trader who is just starting to distribute trades, as every portfolio manager does, because it multiplies the first positions by 9 or 10. So you find yourself down 10 times what you would be or what you should be, with resulting in important drawdowns, because you have to distribute statistically your trades and not entering all in one shot as many portfolio managers do. I think you have to allow an option to make it 1-to-1 as a max until a threshold of exposure in the portfolio account is crossed. Okay, so the risk engine doesn't multiply your first trade by 9 or 10. I'm presuming that you only distribute into trades that go against you from this explanation, right? So let's say you clipped one lot at this price and then it goes towards your target, you would only be in that position by one lot. Whereas if it went against you by 1%, I presume you'd be clipping another one lot, maybe even doing a semi-style of marketing, 2 lots, 5 lots. That is an issue from a predictive perspective from exposure, because we look at a lot of your winners and you was only in by 1 lot, but then a lot of the trades that went into a larger drawdown, you might have been in 10 lots or 5 lots or 15 lots, who knows? And so it's very difficult to manage the exposure between two different types of positions. So whilst I understand what you're saying in terms of being able to distribute trades, I don't think it's as big of an issue as you've sort of said, because it doesn't multiply your first trades. It risk adjusts them to a 6.5% value at risk, and then we'll try and incorporate the next trades into a position as a whole and manage that exposure. But if you're martingaling, you will probably see an increase in the disparity between. Abdo said, it happened to me. I was down in 2 or 3 months, 1.5%, but it was 15%. Okay, so it sounds like you're being scaled up from a risk engine perspective. Again, if you want to have a chat about it, I'm always happy to have a conversation. So I would say join the Discord or send me an email. Darwinex.com. I'd say send me an email and we can jump on a call so I can take a look properly and we can take a look at how that's happening. Not martingale. Okay, so yeah, that just sounds like you operate at a low risk level, and therefore our risk engine scaling you up, which is nothing to be concerned about, even if you've had a 15% drawdown. But like I say, yes, please, thank you so much. Perfect. Just drop me an email, drop me a message on Discord, and we'll put a call in the calendar and we'll get on and discuss it in more detail. So to finalize, Moritz, Rolf, I just want to say a massive thank you for joining us in today's session. We will be back and we will be doing a follow-up session where we'll go more into statistics, more into analytics, whereas today was more about bringing the guys on and getting you to know them from the community perspective, and getting Moritz and Rolf to know you guys as well. So once again, thank you very much for joining, guys. It's been massively appreciated, and we'll see you in the next session.
Awesome.
Thank you. It was fun.